So we're going to wrap up the week today. We have a couple short things that have posted today. One opportunity we talked about in our last video, or I don't even know if we covered in the last video because it just happened right after the last video, is we had one of our stocks. I will pull that up here. Talk about that in a second. Realistically, before we get to that, just looking at the rest of the stocks, there's not a whole lot of movement. I'm just going through here and everything's like 1%, 2%. GNC is the exception because they're a little flyer in bankruptcy. XAN, I guess we'll talk about. But there's really no stocks that are moving a whole lot. I guess XAN is up 6%. That's taken such a beating just because it's a commercial real estate REIT that, I'm not really counting it. Doesn't really matter. So what if it goes up? There's not really a trend there that we're looking at so far. Secondly, we looked at some of our gambling stocks. We have Caesars Entertainment and DraftKings. They went down 4% and 5%. They've done so well, honestly. I mean, Caesars is my number 2 performer overall, and DraftKings is probably grown faster than any other stock that I own right now. So I'm not really worried about that. Takes a little blip. They'll come back. I'm not worried about it. But one stock that I did look at that had kind of a crazy day this week was ICAGI. This is the European airline conglomerate. They own British Airways, I think Avianca and some other ones like that. Well, it was up at like 415 and then it just took a plummet down to 292. And it took me a while to figure out why it was. I mean, I kept scouring news sites and stock pages and, look at Zacks and Yahoo Finance and Market Watch and Market. I just couldn't find anything. And finally I went to basically a thread where people are talking about this particular stock, and apparently they are raising cash, and they basically, if you saw the social network, that's kind of what they did, is they basically put in a new offering for new shares of stock. Now, a good chunk of that went to existing shareholders where they just exchanged their shares, but it went to also new shareholders at all. So basically what happens is, to use a very crude analogy, let's say you have 1,000 shares of stock, and I own 100 of them, and then you say, okay, well, I'm gonna create 200 shares of stock. Well, it's not worth 1 in 1,000 anymore. It's worth 1 in 1,200, and so the stock price goes down just as a percentage, and that's kind of what we saw here. But when we look at it right here, as far as analysts going, it's an absolutely no-brainer buy. 68%, 28 hold, and then 4% of people who are just absolute pessimists say sell it. But realistically, this is the British Airways stock, and technically it's an ADR because it's on the London Stock Exchange. ADR just means something, I forget what it means, but it's basically the equivalent of they create like a placeholder stock so that you can buy the stock that's on the London Stock Exchange, but you can basically buy it in the US. So it's basically the same stock. So it went down to 292, and I immediately said, all right, well, I'm going to take advantage of this because I like this stock. And I think, honestly, they're catastrophe proof of all the airlines that I'm looking at. This is probably the most bulletproof stock that they had. And so it went down yesterday to 289, and I just said, okay, fine. If that's the case, then we're going to buy it at 280. We'll let it go down. I think it went down to 292 technically. And I said, all right, I'll only buy it if it goes down a little bit farther. So it went down to 280. I put 500 new shares in. And if you look up here, I only had 250 shares before. So I've basically tripled my holding in that company. Drove the stock price down from like 489, I think I had at the time, down to 347. And it went to 277. So it's basically at the buy point that I had, which is perfect. So what we did here is we lowered the overall cost basis. So when this stock goes up, let's say it goes back up to $5, you're going to see a massive jump in performance. So we always say that, the glory muscles are kind of the pecs and biceps are these ones that everybody looks at and thought, oh, that's amazing. But realistically, what I'm focusing on is driving this down and looking at opportunities for getting a really good stock, having people sell it and taking a dive on it, and take advantage of it, reduce my cost basis, because it will go back up, and when it goes back up, we're going to see even a bigger return. So with that being said, current stocks I own from what I bought them for, we're up 50%, and that's just in a matter of a few months. And then overall, from the initial deposit I put in of $33,000, which is a measure of our true gain, we're still over double our performance. We have one stock that's over tripled. That's Signet. and we have three stocks about to break triple. That's Crestwood Equity, which is an oil stock, Caesars Entertainment, which is a betting stock, and Redwood Trust, which is a REIT. So doing very, very good overall, and just looking to continue, kind of things that are happening going forward. And again, the artificial little benchmark that we have coming up is the election coming up in the beginning of November. And I have a feeling no matter who wins, you're going to see it jump up either way, just because the markets hate uncertainty, business hates uncertainty. When you strip out the uncertainty, you're going to see a lot of things happen. So I think if Trump wins, you're going to see the stocks jump a little bit higher. If Biden wins, you just don't know if he's going to serve. The odds are that he's either going to quit right after he becomes president, or you're going to see the people pull the 25th Amendment and say, look, Joe, we didn't want to say it when you're running, but you have dementia, which, I don't want to sit here and rip on anybody because they have dementia, because it sucks, and I know people that have had it and it's terrible, but don't run for president if you have dementia. But putting Kamala Harris in charge, dear Lord, and it's not a partisan thing. I know of her. She tried to take down my old company. Very corrupt person. Anybody but Kamala. Even Hillary. I'd rather have Hillary than Kamala, which is kind of scary. But overall, things are going in the right direction. Buy some good stocks. Look at your cost basis, and there is tons and tons of money to be made. Again, I'm shooting for the beach house. That's what we're shooting for. And we're well on our way, shooting to get over 100,000 by the end of the year, which I think isn't going to be a problem. But get started. Download in the video description, you can download the spreadsheet, download a link to Robinhood where you can get a free stock on me. And other than that, have a great weekend, and I'll see you on Monday.
To get more information on the sales cheat code, go ahead and click on the subscribe button below. Also, down below in the video description, down there, there's a link that takes you to our website that gives you additional content, some additional freebies that we have, and gives you information on some programs that we have that have been proven to help people to make sales easy so that you can make the kind of money you want, live the lifestyle that you've always wanted, and not have to struggle in the process. And what might be the coolest thing of all is you don't have to put much effort into it. It truly is a cheat code that most people don't know about. And it's a cheat code that can change your life today. So click on the link below and let me help you start to experience these results starting right now.